Gary Wagner here just before 11 o'clock in Honolulu, before 4 o'clock in New York, on Tuesday, 14th day of January, 2014. And this is the daily report for gold and silver. We do have moderately lower pricing pretty much across the board in the precious metals markets. We have the Dow recovering after having a dramatic down day. To gold, as you can see, it has broken to 1242 and change, puts it off about $10 on the day. Now we are just at the lows being 1241.30, the high 1255.50. Silver also trading near the lows. Again, a 60-minute chart, just as we saw in gold, this dramatic one candle drop. Trading currently at 2017, puts it off about 25 cents on the day, the low 2009 and the high 2070 on the day. We'll talk about silver towards the end of the show. Traders, want to begin today's show. I want to kind of revisit this 60-minute chart. Standard candlestick format, you can see this dramatic downturn candle in terms of quite a range, a $10 move in about an hour of time. But what I find really jumps out at me is this is 1255, and we'll look at a 240-minute chart right after this. But there's no doubt we have some resistance in this area. Market was unable to really take anything out above that, and we're now under a little bit of pressure. But where we can really see the momentum to the downside, this kind of pivotal turn, is this 240-minute chart. Really need to go ahead and blow that up, which I'm going to do now. And let's get rid of our little range box that I have in there. And when we look at this 240-minute chart, of course, this is Japanese average format. You can really see the market comes up. Take a look at it from here. This is what, roughly 1225. This is where it found support just around, I believe these lows are 1211 right in here. And you can see it slowly builds. You have very, very small body size, but they have gone green after being red, after selling off, moving down here. But you'll notice that this trend really begins to accelerate. Look at how these body sizes grow. And you get your biggest body size, I really think it's this one or this one, but then they begin to contract. And these last two here, really when you compare it, the body size to the body size of the prior ones, you can see you're getting a real contraction, and then you get kind of a pivotal candle. There's that doji, and then it goes red. However, that was really to be a fake out, because we then went green again. And again, this is just short-term 240 minutes. But you can see we had one large body right in here, then it goes small, and now we're back to red. The other thing that is absolutely noteworthy is where it stalled, because if you recall, on this particular chart, we're looking at some very, very short-term support and resistance levels. The shorter term, the chart, of course, we're looking at microcosms, and we're certainly not looking at big pictures when we look at this, but I have a couple of different fib retracement points, some starting from this top here, or concluding, I should say, and some concluding from here. What we get is a 50% retracement, which comes out to 1253. That's right here. But here's what's really interesting. Draw a line across this, and this is a good example of some very, very strong harmonics, because the 38% retracement comes to 1252. The 50% retracement on this one comes to 1253. Harmonics are simply where you have multiple Fibonacci retracements, but you get an area that's defined by a harmonics, meaning both of the different scales line up to the same note, so to speak. I guess that's the best way to describe it. You're getting the same number, although this is 38% here and this is 50%. They're both coming in right at the same point. Now, historically speaking, short-term basis again, absolutely, we see it being an area of resistance. And in fact, the market comes down, moves back up. Again, it's not resistance because it passed that point, but as you can see, it didn't get too much further. It really went to this 1260 area, which is 1265, right at these tops right here. Market then comes down, and on this move, 1240 becomes the top that it cannot take out, and it does appear, at least on a tentative basis, that we have found some sort of at least very, very short-term resistance in the market at 1253. Next chart that I want to look at on today's show is the half-a-day Japanese average candles, and this is spot market of gold. We've got our long-standing resistance line, and by long-standing, this line actually starts from 1800 all the way down, so it encompasses a tremendous amount of time and price. But here's the thing, let's go ahead and blow this up a little bit. And again, here is that 1253, the 38% resistance. When we look at these candles, market's trading roughly 1243 right now. But again, realize that as these markets come down and you get pivot points, you typically, on a pivot point, will either get a doji candle itself, very, very small bodied candle, or at least a small bodied candle if it's not an extreme doji as we do here. Clustering of dojis here, doji here, doji here. And so lo and behold, we have a doji here. What is that telling us? Well, on a short-term basis, what that's telling us is that we could dramatically and definitely be at some sort of key reversal, not key reversal, but a pivot point, short-term. Key reversal I would look at around 1211, but you're getting a pivot point. We're getting the doji candle. So if it follows through, what are we looking for? Well, in terms of dramatic price drop, we're sitting just below the 23% at 1245. And so what I've done is I have removed the Japanese average study and gone to straight candlesticks because we're really not going to get a true sense of resistance by looking at the Japanese average. And it's clear to see 1253 where you've got these tops in there. You can see how beautifully the market comes up, kind of stalls, and then is moving down. We have either an incomplete or a full dark cloud cover, and we have the confirming candle. So we do have the makings right now for the potential of lower pricing. We are short this market. We're short from 1245, so roughly in this area. We are going to look to trail our stops down, and the only real stops that are going to make sense is to put them above these most recent highs, which is 55. You might want to move it to 56, but it's already sitting at 65. But that's how we'll look to trail the stop down. What are my particular targets on this trade? Well, the next real level right now has got to be 1227. And between 1227 and 1221 are the targets that I'm looking at in terms of potentially to see where this market goes. 1221 kind of lines up with this bottom right in here. Now, we're certainly not near there yet. However, the market is moving in the anticipated direction that we were looking at. And now we want to see how we can profit from this trade and how do we get any kind of maximum return from this trade should it continue to move in our favor. Now, for the big picture, we'll go back to our daily chart. Let me remove this arrow so when we blow this up, we actually have an idea of what we're looking at. It has been my belief, my contention, that this long-standing resistance line is really something we've got to look at. Even though the market had been rallying higher, my sense was, how is it going to react if and when it gets to the top of this particular area? Because without it breaking above that, we're not looking at anything bullish, traders, because what we're really looking at is a marketplace that's dramatically trading lower, as we can see right there. It comes up, goes right to resistance, and realize that resistance was created from this tact or this angle back at the beginning of 2013, the conclusion of 2012. Comes back down. You can see how it found support. Here's 1219. And then, lo and behold, when it goes back up, it finds difficulty once again. Now, we also talked about the fact that when we're doing our Elliott wave count, let's go ahead and blow this chart up for that. When we look at our current Elliott wave count, my sense right now, of course, this is wave 4, composed of an A, a B, and a C. We then go into our 5 count down. We've identified a 1. This is our wave 2. This is our wave 3. And we also talked about the fact, if you recall, let's move this down a little bit, that to be accurate in terms of an Elliott wave count, this cannot be in any way a fourth wave if it goes into the trading range. This is the trading range of wave 2, if it concludes here, this is the trading range of wave 4, 2 and 4 can't go into each other's range. And you can see effectively that is the case. It does meet the criteria. Now, if this market does now start to drift lower, what can we expect it to do? Well, we could easily still get that bear market truncation if, in fact, this last wave either has an equal low of wave 3 or a low above wave 3. It would still be what's called a bear market truncation or a truncated fifth wave. This is the fifth wave right in here, and this is also an intermediate fifth wave. So in that way, we want to see how it reacts, and what we'll look to do is if it continues to start moving in our favor, we will begin to trail our stops down to protect profits. Once they start to build up, realize we're only in a couple of dollars above this, so there's not any real profits just yet. Now, traders, we're seeing similar activity in terms of being top heavy in the market in silver that we are in gold. However, there's a key distinction, and the key distinction that I'm looking at between silver and gold is whereas gold was tracking higher, you could see a definitive trend, moves to a resistance area and pops back down. If we look at the trading activity of silver over the last couple of months, rather than it having small little rallies, peaks and valleys, what it is having is this very tight range between $19 and $20. So it's been trading within a very tight range. As you can see here, breaks through the range dramatically. But aside from that, it has been range bound between, call it $20.50 and just above 19. So it's been range bound for the better part of the last couple of months. We'll have to see, but this is where I would look for it to break to the bottom of this range if gold continues to break down. Traders, one side note. As you know, we have been working feverishly doing a lot of changes to the website. We're really building out the members portal. I hope that you've been happy about what you've seen. Of course, you can always view the most current daily report here. The weekend review is always available here. Recent videos, by the way, is just going to give you day by day. These are all the days that came in. You get to view them at any point you want, and it goes back as far as our archives go back. So you've got a lot of information that's available here. But what I wanted to talk to you real quickly about is this forum that we're just opening up. It doesn't have that many comments in it. As you can see, we've been working under gold discussion. If you go into gold discussion, you'll have a couple of different topics that are coming in, and I invite you, our daily subscribers, to partake or to participate. This forum was created for you. You can post questions, you can put up charts, you can give alternative ideas, but it's really what I want to do is have a home for us technical hybrid traders to be able to discuss with one another and have a sounding board for our ideas. So I welcome you to please, it's right here, forum, you get that from the main menu. And go ahead, and hopefully it's something that will aid and help you in terms of your knowledge, your trading expertise, and just interacting with other traders themselves. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.